What's up, you guys? Today we got 3 stocks or ETFs to watch for March 2020. Please stay tuned for more. Don't forget to hit that like button, and as always, subscribe. It really helps us out. This video is brought to you by On a Dime Podcast. Ever miss what's going on in the world of sports? These guys will fill you in and provide some laughter to your day. I personally know Ken from this trio of podcasters. Check them out wherever you listen to podcasts. You won't regret it. I'll link them in the description. All right, let's get back into it. You guys know I am not a certified financial planner. This is just a hobby of mine where I take some time and look at 3, maybe 5, but this time 3 stocks that I'm watching or maybe buying. Typically, I am a long-term investor investing in ETFs, mutual funds, index funds, spread across 4 categories: growth, growth in income, aggressive growth, and international. Occasionally, I do look into single stocks if there's a good buying opportunity. Please use your own research. Don't just take my word for it anytime you're looking to buy stocks. Guys, it has been a rough now about 2 weeks. If you haven't heard, the coronavirus is a big reason for that, and so it has caused a lot of volatility on the market. And I don't want to make light of the coronavirus, but I do want you to know that I am not changing my investing pattern, my investing philosophy. I'm going to continue to buy stocks and to continue to invest in my future. I'm not going to let this scare me. As you might know if you follow the channel, we do have a portfolio where we're saving for a car, so that's kind of showing more of a short-term view. I do apologize for that. You might see a good lesson of why you can't just be thinking about short-term investing depending on how this portfolio goes, but I'm going to continue to buy stocks. I haven't done an update on those stocks in that car portfolio more recently, but I'm looking to get that maybe up later this weekend. Another side note, just to kind of show that I am not changing my investing plan. I am really trying to fully fund a Roth IRA, and so we have about a little over a month now until the deadline for 2019 contributions to our Roth IRA, and I'm continuing to, if there's money left over in the budget, try and throw that money in there just to get it away before April 15th when that deadline hits. And just one other side note, I did just want to share my one post that I made at the beginning of the week on Instagram. If you don't already follow us on Instagram, please do that, at Gym Class Finance. I'd love for you to follow along on there as well. But I'm just going to go ahead and quickly read one of my posts just to kind of continue to talk more about this mindset that I have and I want you to have as a long-term investor. So here we go. It just says, take a deep breath, relax, and think about your plan. There are going to be ups and downs in the market. No one truly knows what next week or more will mean for investors. You only lose when you sell. Continue to have a long-term plan for your wealth building and retirement by hanging in there even when the markets drop. It's entirely impossible to time the market for the right entry or exit. This is another reason to think long-term. The stock market on average gains 8 to 12% annually. Sometimes it dips, plunges, corrects, sometimes it remains flat, and sometimes it soars upward. Many times it does these things for unseen reasons. Most times the market moves because of news, good or bad, and other times it's because the overall economy is healthy, or investor confidence, or not investor doubt. If you're still feeling uneasy, consult with your advisor. Otherwise, continue to crush debt, stick to budget, spend less than you make, and consistently invest for the long term. Oh, and get those side hustles rolling. It's that simple. Hopefully you got something out of that. I don't want to sound like a broken record, but I do just want you to understand that we're continuing the same investing principles that we have talked about and are going to continue to talk about. And I just want to, provide that assurance that even though I don't know what's going to happen next week, what's going to happen, in the next month, but I'm just going to continue to invest when I can and continue to think about it long term. We are about to get into these 3 stocks or ETFs for March 2020, but I just want to say one other thing related to them. These are going to be more, I don't want to say safer picks, but obviously the market has been extremely volatile. There's a lot of stocks out there that really could present good buying opportunities right now because obviously a lot of them have dropped. If you look at the the airline business, those stocks you might be interested or might want to start to look into them. I am actually, and actually one of the companies that I'm going to talk about actually acquired several shares from one of the major airlines that has just been getting hammered due to the coronavirus and all the fear surrounded and the lack of travel in some areas because people just either don't want to travel or there's restrictions on travel. These stocks or ETFs that I chose are very diversified, and they're going to give you dividend that you might be interested in. They're going to give you growth, and they're going to give you the total stock market, which leads us into our very first pick. So let's get right into it. So our first pick is ticker symbol VTI. That is the Vanguard Total Stock Market ETF. And when you invest in this ETF, an ETF is an exchange traded fund. You are getting the entire stock market. So I'll share a few of the largest holdings within this ETF, but essentially you are getting an index of the entire market. So whatever the stock market's doing, this ETF's essentially going to mimic what the entire stock market's doing, which is one of the reasons why I think because it's so diverse. I think it might be a great stock to get right now, especially because it has dropped. Here you can take a look at what it's done over the last 5 years, 1 year, and month. As we're looking at some of the fundamentals or just kind of important numbers that I look at, you can kind of see on the left side it is priced at $153 a share. This is a growth / quarterly dividend ETF. The net assets, so that's all the stocks that they have that make up this ETF that they've acquired under this ETF. They have 131 billion in net assets. The PE ratio we weren't able to come up with and get that information at this point. The annual dividend is $2.90. The yield is 1.83%, and it last paid a dividend at the end of 2019. So that pretty much, because we're in March and it pays a quarterly dividend, I anticipate that dividend paying towards the end of March. So that will be coming up, which will be nice. And as you said, the U.S. Total market is the sector for this ETF. You can use other brokerage companies that have ETFs just like this, but I like this one for several reasons. You can see it's at an attractive price. It has a proven track record, and something that everyone will like is that it has very low maintenance fees of 0.03%. So that essentially means that for every $10,000 that you would invest, you would pay $3 per year. So that is extremely low compared to other index funds, ETFs. So it's another reason why this was my first stock / ETF to watch for March 2020. We're going to move on to our next stock. And if you are someone who watches the channel, you will recognize this one from last month. It's one I'm going to continue to buy. Actually thinking about adding some shares to our Roth IRA. And the stock that we have for March 2020 is Berkshire Hathaway, ticker symbol BRK, .b. And if you're unsure about this stock, it is prolific investor Warren Buffett's company. And those unfamiliar with him, he's one of the wealthiest men in the world with a net worth of over $88 billion. Let's just listen to a real quick perspective. I just found a quick little video of Warren Buffett giving us a little information.
I don't think there's any way to predict what the stock market will do 10 minutes from now, 10 days from now, or 10 months from now. 20 or 30 years from now, America's business and probably over the world will be far better than it is now.
So you heard from his perspective. He's looking at, our world and just knowing that business is going to continue to thrive. There might be some downtimes, but looking in the far distance, in the future, just knowing that a track record for the stock market as a whole, it goes up. And so yes, there might be some downtimes, there might be some waves that we have to ride, but he has that perspective, which I think is great. And he's continuing to add to his portfolio. He's got plenty of cash sitting on the sidelines, and he's actively buying and adding to the portfolio. If we just kind of take a quick look at some of those fundamentals of Berkshire Hathaway, you can see the stock price is $209 currently, and this is a Warren Buffett large cap stock. Market cap is $509 billion with a PE ratio of 6.29. And as I mentioned in February, Warren Buffett is a huge dividend guy. He believes in dividends, but for his company, he reinvests those dividends. So you're going to see this stock as more of a growth stock. It's not really a dividend stock where it's paying you those quarterly payments, which is interesting to think about. But it is a great stock, and one that people are actually kind of sharing and talking about, a great stock to have, in the event of a downturn in the global and, just looking at our U.S. economy. Buffett's company has acquired businesses outright. More recently, he's just he buys Apple and Amazon, which I'm a big fan of those two companies, and so it's great to know that that's going to be part of the Berkshire portfolio. But most recently, he's continuing to buy airlines. He just recently bought some Delta in a pretty big position in Delta. So he's continuing to buy things when they are down. So the largest portion of the portfolio is made up of financials. He owns a lot of different pieces or shares of several different banks, but he's also the portfolio is highly invested in informational technology, which that makes up about 25% of the portfolio as well. So I like some of those companies that he is in sectors that he's really involving himself in. So this stock is definitely not perfect by any means. There are a lot of companies that he owns that aren't doing the greatest, but I like where they're going. I like that he's not afraid of the market, even though things are definitely a little volatile, and he's continuing to buy, especially, there might be some good advantages to that as well. Let's move on to our last stock for March 2020, and that is ticker symbol SPHD, Invesco S&P 500, high dividend, low volatility ETF. Now, the expense ratio on this stock is definitely a little higher at 0.3 instead of 0.03 that the VTI was. But there's definitely a reason for that, because it is a stock that it pays a monthly dividend, and it's, as I said, it's a high dividend, low volatile ETF, and it's currently it's dropped. It was definitely at its 52-week highs pretty recently until the last week and a half, whenever things have kind of fallen down. So I do think it's at a good buying point. Let's go ahead and take a look at some of the fundamentals of this company, an ETF. See, it's currently at $39.04 a share. It's a monthly dividend stock, so you're getting paid every month, not just quarterly. Every month you're going to get a payment, and the amount depends on how many shares you might own. The net assets, so the total amount of assets, it's not as big as VTI, There's 3.24 billion. I don't have the PE ratio. It pays, as I said, a monthly dividend, and the yield is 4.54%. So for every $100 that you own in the year, you can make $4.54. So that's kind of one way I like to look at it. The ex-dividend date happened on 2/24, so that was the date that if you own the stock, you were going to get paid that dividend. And the dividend next pay date, when they're not going to pay that out, is going to be on March 30th, 2020. This is a U.S. large cap sector ETF. Now, even though it does have a higher expense ratio, I do like this stock, especially for a beginning investor. I think that it can really, it can show you how it works, how the stock market works. It's a relatively safer stock because of that, the low volatility in the companies that are bought. My average cost of this ETF is right around $39.90. I'd love to get it to closer to $39. I don't want the stock to go too much lower, but at the same time, if I can scoop up some more shares at a lower price, I am definitely happy with that. I don't want to waste any more of your time, and we are to the end of our 3 stocks to watch for March 2020. I want to encourage you to take a look into these and let me know what you think about them in the comments below. Once again, we have VTI, we have BRK.B for Berkshire Hathaway, and we have SPHD. Those are my 3 stocks. Remember, always do your own research. Seek the advice from a CFP, and remember, it's that simple. I'll see you next time.